Financial markets have been around since the 1600s, and the evolution of them is forever progressing. The evolution of financial markets are changing so rapid to the point where retail traders are looking like they can be profitable investors. This is happening at an alarming rate, and if you do not have the ability to access financial markets with efficiency and long-term profitability, you may be missing out on one of the largest wealth opportunities for generations to come.
Don't talk to me.
Welcome back. If you're new to the channel, my name is Matt Jimenez. I'm an entrepreneur who has worked with the greatest minds in finance, and I'm here to pour into you guys everything that they poured into me. And in this video, I want to directly address the timeline of financial markets, how they have progressed with the evolution of technology, how easy it has become for people at home like myself and you watching this to access these markets and input trades. But more importantly, I want to talk about how you can actually streamline the whole process of even having to know how to invest to be able to do this. But first, let's go all the way back to 1602 when financial markets really took place, and this happened in the Amsterdam Stock Exchange in 1602. Later after that, we had the London Stock Exchange in 1801. These early stock exchanges provided a centralized platform for investors to sell and buy shares of companies, and this marked the beginning of financial markets for investors as we know it. And really, this dated even before those dates, but nothing was official because most of it was done via trading, with merchants exchanging goods or currencies, primarily commodities. Now, fast forward to the 20th century, we witnessed significant changes for financial markets as we know it, with the introduction of electronic trading systems in the 1970s and the globalization of financial markets through the advancements in communication and technology. By the late 20th century, traditional trading gave way to the electronic platform of trading, which essentially paved the way for a revolution to happen. This leads us to the advancement of technology, which, as I said, revolutionized financial markets. In the late 20th and 21st century, the widespread adoption of the internet in the 1990s ushered in a new era of online trading, enabling individuals and investors to access markets and execute trades through online brokerage platforms. The launch of online trading platforms like E-Trade in 1992 and Ameritrade in 1995 democratized investment opportunities, empowered retail investors to participate in financial markets. Now, through the 2000s to 2010, advancements in algorithmic trading, high-frequency trading, and electronic communication networks, also known as ECNs, reshaped the landscape of financial markets as we know it. Algorithmic trading algorithms and automated trading strategies became extremely prevalent in the day-to-day usage around this time because they optimized trading execution and making it far more efficient to participate in markets. High-frequency trading firms leverage technology to execute their trades at lightning speed, contributing to market liquidity and price discovery. And now that you understand a little bit of how much we've evolved over the years, you could see how in the late 2000s to 2010, there was exponential growth with the introduction of technology, which allowed for algorithmic trading softwares to take place and high frequency trading to take place in firms and in the investment banking sector. But now what's happening is it's becoming more and more prevalent for retail traders to access these algorithms that are extremely profitable and extremely efficient when it comes to beating the market. A lot of people think that you need to manually position yourself and usher your way through financial markets and find positions, find the strategy that works for you. But quite frankly, that is completely dated. More importantly, what you need to find is a technology that works for you. And what I mean by that is finding one that you deem profitable. You make sure that it was back tested to be profitable, and also understand who it's being provided by, whether it's being provided by a broker or a company. The most optimal way to know if it's profitable is obviously how much data is behind it and also who is behind it. You want to know the ethics and the morals of the people that are offering the technology. Your efficiency in the markets today will have a far greater ROI if you find a good technology rather than trying to find a good trading strategy that you could try to mimic, learn the markets, choose the markets, and spend all your time on the computer trying to find the trades in the markets. And you can see technology is not slowing down as we move forward into the future. You must find a way to use a certain technology technology to help you make market decisions. Now, if you're curious on the one that I'm using, the link is down below. And like always, my friends, peace.